G'day taxpayers. The Reserve Bank. How do we judge whether it's done a good job, an average job, or indeed a bad job? Because of course they're the custodians of interest rates. They set them independently of the government. They base interest rate changes or the level of interest rates that they set on their assessment of the economy, and of course the endpoint where inflation is. So I thought I'd have a little bit of a look at how successful or otherwise the Reserve Bank's been over the last decade. That's a sort of a long enough time frame to sort of have a fair assessment of good, bad or indifferent. So taking the trimmed mean inflation rate as their benchmark, as they like to do, and getting it between 2 and 3% in annual terms, as they like to do, I thought was a reasonable starting point to see how the Reserve Bank's done. So since the end of 2015 through to the middle of 2021, so that's more than 5 years, inflation on every single observation was below the bottom of the target band. They missed it for 5.5 consecutive years. That was the failure, and that was Philip Lowe not cutting interest rates enough. We've sort of covered that in the past. Then, as inflation picked up, it got between 2 and 3% for 2 quarters, and then for the next 3 years was above the top end of the target range. And then only just in the last quarter has it got to 2.9% back within the target range. So for basically 10 years of data, 40 quarters in other words, we've only had 3 quarters, less than 10% of the time where inflation's been in the 2 to 3 target band. And so to me, that's a pretty emphatic fail. Now, of course, we don't expect it to be exactly within the 2 to 3 target band every single quarter. There are things that pop up, lettuce prices, oil prices, changes to various tax reasons, but they're usually trimmed out of the headline inflation rate. But nonetheless, they can still have some impact. But to have such an abysmal accuracy, and of course, businesses are trying to frame their operations, workers are trying to organise their pay increases and the like, with inflation's at sort of 1.5% or well above 3%. So it makes business and the planning of the economy all the more difficult when the RBA screws up. So I think it's fair to say that, look, inflation's in the target as we speak. We get the June quarter numbers for inflation in about 6 weeks' time. It's probably going to see that trim means still at 2 point something, so in the target for a second quarter, whoop-de-doo. But I'm genuinely fearing that they've kept policy too tight for too long now, and we'll have inflation go back below 2% in the not too distant future as the RBA has kept policy too tight for too long. Now, they can remedy this. They can cut 50 points in July, but their track record is not a good one.